Hi, this is Ken. Tesla isn't slowing down. It's entering a phase where its strengths and weaknesses are finally becoming visible at the same time. In today's video, I'll break down what actually matters for Tesla investors right now. Not just headlines, but the deeper signals behind the latest updates. From Model Y changes and Cybertruck validation to AI progress and rising competition in China, and what all of this means for Tesla's long-term trajectory. Because over the past few days, we didn't see one massive headline. Instead, we saw something more important: signals. Across vehicles, infrastructure, AI, and competition, we're starting to see a clearer picture of where Tesla is actually heading, and more importantly, what risks are emerging alongside that growth. Let's start with Model Y. In British Columbia, Tesla rolled out updates to the Model Y Premium AWD and Performance. Interior upgrades like the black headliner, a 16-inch QHD display, new wheels, and exterior badge changes. On the surface, this looks minor, but what really matters here is timing. Deliveries are happening faster than expected. This suggests that production efficiency is improving, supply chain constraints are likely easing, and Tesla is getting better at rolling out incremental upgrades without slowing down deliveries. And there's one key point investors shouldn't ignore here, which is V2G, vehicle-to-grid capability. If Tesla can scale V2G globally, this changes the entire game. Cars are no longer just products. They become energy assets. Tesla doesn't just sell vehicles, it becomes part of the energy infrastructure itself. That's not just automotive anymore. That's a completely different valuation framework. Now let's move to Cybertruck. It just received the IIHS Top Safety Pick Plus rating, and it's the only pickup truck this year to achieve that. This is a major shift in narrative. Cybertruck has always been seen as controversial, more of a bold design statement than a serious product. But now we're seeing validation, not hype, but real-world performance. From an investor perspective, this matters more than people think. It reduces uncertainty. It tells the market that Cybertruck is not experimental anymore, it's becoming a reliable and scalable product. And that's how Tesla successfully expands into new categories. Next is charging infrastructure. BMW's i5 is now adopting NACS across all trims, Tesla's charging standard. This might sound like a small headline, but it's actually one of the biggest long-term signals. Tesla is becoming infrastructure, not just a car company. If more automakers adopt NACS, Tesla's supercharger network becomes the default backbone of EV charging. That means recurring usage, recurring revenue, and ecosystem control. This is very similar to what Apple did with its ecosystem, but Tesla is doing it in energy. And if this expands further, especially into dealership networks, infrastructure growth could accelerate much faster than most people expect. Now let's talk about Tesla Semi. Tesla announced that the battery is designed for 1 million miles, around 1.6 million kilometers. This is huge because in commercial logistics, durability equals profitability. Fleet operators don't care about brand image, they care about total cost of ownership. If Tesla can deliver this level of durability, adoption becomes much more realistic. And here's the key insight: commercial EVs may scale faster than consumer EVs because the ROI is much clearer. This could quietly become one of Tesla's most stable and predictable revenue streams in the future. Now shifting to China, Tesla extended its 0% financing incentives for Model 3 and Model Y, while at the same time BYD is expanding aggressively into global markets. This tells us something very important. The competition is no longer EV versus gas, it's EV versus EV, and not just on price, but on financing, ecosystem, software, and brand. Tesla is entering a much more competitive phase, but the nature of that competition is different. Tesla is not trying to win purely on price, it's trying to win on integration, and that's a very different strategy. Now, let's talk about FSD. We saw another example where the system anticipated a pedestrian and slowed down earlier than a human driver might have reacted. This isn't a breakthrough headline, and that's exactly the point. FSD is now in its compounding phase, small improvements stacking over time. This is how AI actually wins, not in one big moment, but through thousands of incremental upgrades that most people don't even notice. And this is often underestimated by the market because it's harder to measure, but over time, it becomes incredibly powerful. Now, Robotaxi, we're seeing changes in usage rules with lower age limits but stricter safety requirements for minors. This shows Tesla is trying to balance expansion with responsibility. But what's really interesting here is the use case. Think about travel. You fly into a city, you don't rent a car, you don't worry about driving. You just use a Robotaxi. For families, for tourism, for logistics, this is not just transportation, it's a shift in how mobility works. Tesla is moving from selling cars to providing mobility as a service, and that's a completely different business model. Now let's touch on Optimus and some organizational signals. There are expectations for Gen 3, but timelines appear to be shifting. We're also seeing talent departures in areas like Cybercab and XAI, and in Japan, sales are growing while service capacity is struggling to keep up. At first glance, these might look like negative signals, but I see them as symptoms of scaling. When a company grows this fast, friction is inevitable. The key question is not whether problems exist, but whether Tesla can solve them faster than it grows, and that's something we need to watch closely going forward. So bringing this all together, what we've seen over the past few days is not one big story, but a collection of signals. Vehicles are improving, infrastructure is expanding, AI is compounding, competition is intensifying, and organizational complexity is increasing. This is what a transition phase looks like. Tesla is no longer just a high-growth EV company. It's becoming a multi-layered ecosystem across energy, AI, infrastructure, mobility, and robotics. And for long-term investors, this is the key perspective. Short-term, there will be noise, competition, delays, volatility. But long-term, Tesla is building multiple trillion-dollar verticals at the same time. And that's what makes this moment so important. Finally, let's take a quick look at the stock. Tesla has recovered the $370 level, which is a key psychological and technical zone. The question now is whether it can hold, because this level could define the near-term trend. But as long-term investors, we don't just watch price, we watch progress. If you found this analysis valuable, make sure to like the video. And if you want daily, signal-focused Tesla insights, not just headlines, subscribe to Life in the Future. Thanks for watching, and let's keep building the future together. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.